Good morning, everyone. Good morning, good morning, good morning. Very weird price action today. So far, extremely weird price action. Like crazy weird. As usual, guys, just marking the liquidity areas. Nothing special, okay? You already know the drill. Nothing really special. And for those who are new here, the reason why we mark these SMTs is because this is so far, I've noticed that is the best way in which we can actually identify intraday liquidity levels. What do I mean by intraday liquidity levels? I mean liquidity areas that have been forming throughout the rest of the day, throughout the course of the current day. And usually these areas will form and they're going to be visible through these SMTs. Okay, I haven't taken any trades today. I tried. I mean, I did look for a setup during the London session, but I just didn't find any. I didn't see anything worth taking. Because as you can see, the price has been just consolidating, and that's pretty much all that it did. Now we can see here that the closest buy side and sell side liquidity levels for today are here. Buy side, closest buy side, and I would say closest sell side is this area here, because it's just this second leg of the blue SMT, this one. For those of you who are new here on the channel for the first time in the live stream, thank you for being here. And what we're doing in here is, not we, but what I'm doing here is I'm trading gold, and I usually do this by looking for SMT divergences and fair value gaps. And the SMT divergences, I look for those in relation to gold's correlation to silver, okay? Butler said that he took 2 longs today. Very well. We don't have any high impact news today from what I was able to see. And it kind of like explains the weird price action. I would even say crappy price action that we have today. But you know, instead of actually, I'm thinking maybe instead of saying that we have crappy price action, we might actually just be thankful that there hasn't been one of those days when we're convinced to buy or sell and then the market just doesn't do that. Now, maybe some of you are asking or wondering why I marked this area here as minor buy side liquidity. I'll show you. And I know you're going to say, okay, but how would I know that that area, which is so insignificant, it really looks insignificant. How would I know that that is that SMT that I should mark and not another one? You guys, look for other SMTs. You'll see that most likely there aren't any. And if there are, mark those. The thing with SMTs is that you're going to be able to spot them when or if you look for those areas from where price left like super fast, you know? And if we look at this last move to the downside here, this is where it started from, right? It's not really hard to see that. Plus, it formed bearish fair value gaps, all right? So that's another way in which you could look for SMTs to form, okay? Just look for areas where, price formed fair value gaps and then it just moved away from there. Okay, that's the best way to find SMTs. And you know, I kept saying this like every live stream. I keep saying this: these minor liquidity areas that are forming during the day through the creation of these SMT divergences, this is the actual deal. Okay, if you are struggling to identify draws on liquidity or areas from where price might actually reverse, this is what you're missing out on. Okay, it's really that simple. So you're basically just missing out on marking SMT divergences. For example, you can see here yesterday during the live stream, I marked this area as a buy side liquidity, all right? And you can see what happened after price reached there, okay? You don't have to be a rocket scientist to notice all these things. So in here, gold made higher highs. In here, silver made lower highs. SMT divergence. So we know that gold has buy side liquidity over there. All right. Once price reached there on gold, it created another SMT divergence. Gold created higher highs, silver created lower highs. All right. So that's basically your indication that, well, maybe I'm going to have a short setup. And where is your drawn liquidity? Very simple. Where do you have the closest sell side liquidity sweep identified through the creation of an SMT divergence? You see this low here? On gold, this was a higher low in relation to another low from the left side. And if you guys want to see it, I can actually just zoom out and you'll be able to see like that. All right. So we had like that, gold creating higher low and silver. I mean, you can't not see the fact that silver went under that low here, right? You cannot not see this. And if you just take your cursor and you put it here it's going to show you where on gold that stands, which is right there. All right, so that's how you find SMT divergences. And once you use them this way, it's really going to make your life so much easier. Trust me, guys, really. So basically, after we had this buy side liquidity being swept here, another SMT divergence being created. And maybe you're gonna ask, okay, Alex, but how would you have entered? Well, it's very simple. It's the same entry method that I've been talking about ever since I started these live streams. And not only ever since I started these live streams, but actually ever since like more than a year, when I actually discovered that SMT plays such an important role and that I should actually include it in my trading. So basically, gold creating a higher high, silver creating a lower high. This tells you, especially if you see gold having taken buy side liquidity, then this tells you that this push to the upside on gold, it's bullshit. It's a fake higher high, right? It's just sweeping liquidity. So in here, you can come up with different entry criteria, depending on whatever you wish, whatever you like, whatever you understood. For example, what I can see that could have been applied here is break of structure or change of character or whatever you guys want to call it. And then, retest and then moving lower, right? So could have taken the trade once that was retested. Another thing that I can see here is bearish fair value gaps forming. And then we just wait for one of these fair value gaps to be tapped. So we had this one. Oh, come on. All right. And then we had this one. Like so. And so you just wait for one of these fair value gaps to be tapped. And then for your entry confirmation, you have to wait for a bearish M5 candle to close, which in this case was that one. This one. All right. And that's where you enter. So your entry would have been here. And then your stop loss, because the order block, which is that candle, was not hit by any of this price action prior to your entry candle, then your stop loss has to go above the order block. All right, so the trade would have looked like this. Boom, boom. And you target at least 1 to 2 R, okay, which is this. Ta-da. Okay, and if you're looking for liquidity areas like SMT liquidity areas to put your take profit, well, believe it or not, there was one here. There you go. See, SMT, gold created higher low, silver created lower low. So that's where we have SMT sell side, and there you go. That could be your first actual target. Okay. Of course, it's really easy to mark these setups in hindsight. I'm not saying that I am, also good at trading these. I am good at trading these when I am in front of the charts. If I'm not in front of the charts, and to be honest with you, I'm not in front of the charts during the Asia session, because during the Asia session, so basically when this setup happened here, it was 8:35 p.m. New York time. My time was like 5 a.m. or something. No. Actually, you know what? It was even earlier. It was like 3 a.m., 2 a.m., 2:30 a.m. Okay, I'm definitely sleeping at the time. So yeah, you can imagine why I wouldn't take any of these setups that would occur on the London session. No, not on the London, on the Asia session. Okay, but yeah. Now, looking at this, whatever it is that's going on in here, it's absolutely crazy. And we can see that price took out minor SMT buy side liquidity, and then it just boom started to drop. Yeah, I'm thinking that it might actually take out London low, but maybe not. Sometimes I've seen that it might sometimes stop at the midpoint of the SMT divergence. And usually the midpoint of the SMT divergence from the first leg of the SMT to the second, usually it's gonna fall around the bodies of the candles. So yeah, we're just gonna mark this area, right, like that. Yeah, pretty cool, huh? Old MacDonald had a farm, E-I-E-I-O. Do you have a clear explanation video on this strategy? Yes, of course I do. It is on my YouTube channel. You cannot miss it. It's actually the last 2 videos that I've uploaded before starting to make these live streams. So you're gonna find them there. Looking solid so far. Are you guys enjoying the music? Are you enjoying the music? Haven't forgotten about the 4-hour busy here, which we've had that on our radar for like 2 or 3 days, I think. Oh my god, this thing is really heavily dropping. Yeah, hey. Cool stuff, cool stuff. What do you guys think is going to happen once it takes out the low of the London session? What do you guys think is going to happen? Write in the chat, but be fast because it's just about to do it any second now. So what do you guys think is going to happen? Is it going to continue to push lower into the 4-hour fair value gap, which is not that far away? It's like after it touches the low of London, it would be like 24, 25 pips away. But do you guys think that it's gonna do that or not? What do you think? It will continue selling. It will drop even harder. Someone says it's going to go up. Create equal lows. So Hussein, you're saying basically that it is going to reject so that it can create. two equal lows. Let's see. Come on, come on, come on, come on. Any moment now. Come on, it just hit the level, you guys. Woo! All the way down into the 4-hour fair value gap. And guess what? I don't think it's over. Or is it? You know what? I had an alert. Here's what it says here. You guys see? Price reached 30.21. It was the low of London, actually, that I had an alert on. Yay. Wow. Yeah, I don't think it's over yet. I don't think it's done. And there's actually some lower sell-side liquidity areas that it might actually reach into. Silver most likely is definitely going to go around here and maybe lower. But gold is just vibing. Yeah. I feel happy as if I took the setup. Like, oh my God. Maybe I actually did. Who knows? Wow. This just insane. Insane. Woohoo. Anyone feeling discouraged about not having taken this setup? Don't. Okay? Just let it be. Let it go. Let it snow. Whatever. If you just look at price, I mean, again, you don't have to be a rocket scientist to figure this out, okay? Just look at how, like, from 8 p.m. all the way to 1:40 a.m. So it's like 5.5 hours, okay? 5.5 hours, a drop of 2,600 points, okay? 260 pips. Which is insane. So 5.5 hours, 260 pips. Okay? And then we've got from 1:40 a.m. to 8:50 a.m. So that's like 7 hours. More hours. Okay? Like 40% more hours. But the range was only 1,600 points, like 160 pips. So you have 40% more time in order to move 40% less pips. Isn't it obvious that this is trend, pullback, and that we're likely going to have a continuation? It is. Thinking at how the setup might have been taken. I don't know. I don't see any signals on the 5 minutes. I don't see any signals on the 5 minutes. Other than maybe, but I'm just, saying this just to say something, okay? But honestly, I wouldn't have taken it. Like, proof I did not take it, right? Seeing this here. BISI respected, price going higher, creating or being unable to create higher high, right? And then we have this thing over here. I mean, look at this, okay? If you're gonna look at this, and then this. Actually, this one. See? Like, it's clearly that these two pairs, which are usually correlated, right now they were not correlated anymore. Why? Because on this time, during this time, like 8:55, 9 a.m. ish, all the way to 9:25, silver was going higher. During the same time, gold was going lower, which is not normal. These two are like 90, I'm not going to say 99%, not even 95%. Let's just say 90% of the time these two are correlated, even though they're more correlated than just 90% of the time, but whatever. But you can see that they were actually just moving against each other, which is not normal. And just look at this. That candle, which creates the top here on silver, is just rejecting from this inverted fair value gap. But like I said, not the kind of setup that I would have taken. So not because it would not be a setup, but I would want more confirmation, you know. And the type of confirmation that I would want is, like, for example, if I'll go on the 1 minute right now, and on this push to the downside, I'll see a bearish fair value gap that price got stuck in, then yes, we might have taken the trade. And if not, no. So let's just go and see. Well, hell yeah. Hell yeah, that actually happened. And I think that the entry could have been taken like around here. Let me show you. There you go. This may be a little bit stretched, but whatever. But this one definitely here. And as silver stayed here, got stuck in the fair value gap. Let me zoom in so you guys can see better. You see the 925 candle, okay? This candle. This one. And then the 925 candle on silver, this one. Just take a look at what gold does, starting with 925. And take a look at what silver does, starting with 925. It goes up. Whereas gold gets stuck in this bearish fair value gap, which was created to invalidate or to inverse the 5-minute bullish fair value gap. So yeah, that was a hell of an entry. Yeah, this is just continuing to rip lower. Cool stuff. So you guys can see that as I get... Actually, you know what? I'm not going to remove this one. As liquidity areas are being taken out, I just remove them from the chart because I just don't want to see them anymore. But I'm going to leave this, and I'm going to leave this as a flip zone. Because it's a session low, it's where the pullback started, and we broke that, and we also broke that with the CB. Okay, so that's an interesting area to watch, because price might actually just want to come back there. Tears with my coffee, LOL. Yeah, with my coffee too. 3-minute time frame gave a signal. I took the trade on the 1 minute very well. Reached mid of daily busy. Yeah, I also noticed that there was a busy on the daily chart. And actually this SMT that you see here, this one, let's just make it a different color. I think that that's actually the, no, it's actually not. I thought it was, but it's actually not. No, it's here. No, it's not. Okay, I'm confusing it with this one, which is a 4-hour busy. Yeah, I knew that I had like an SMT area marked that also coincides with a fair value gap from a higher time frame. But my goodness, so beautiful. Wow. So beautiful. Checking zones off the radar. This is not today's 12 a.m. It's like an old 12 a.m. that apparently I didn't move to today. Wow, that's so old. Might as well just remove it. Wow, you guys, just look at this thing go. Yeah, so this is just a run on liquidity. Not just, it is a run on liquidity, okay? Definitely not just a sweep of liquidity, which means that we might be officially in a bearish market, at least medium term. It was about case. It was about time, honestly. Because every time liquidity is ran and not swept, that's the actual direction of your trend, okay? When price doesn't just sweep a low only to then go higher. It just breaks through lows like a hot knife through butter. And it's pretty obvious that this is exactly what it's doing right now. Like, there's no doubt about this whatsoever. Because we had sell side area here, we had sell side area here, we had sell side area here, sell side here, and then we have lower, and we're gonna reach this flip zone, which is the previous all-time high before this week actually broke that level and created a new all-time high. Which, if you look at it, just look at where is it? Here, all right, here. Just look at gold just pushing higher here, whereas silver did not do the same. You see? It really didn't. It didn't go above here like gold did. So it's kind of like obvious that the bullishness was getting weak. Now, this is the kind of price action that you just don't know what to trade after this kind of price action, you know? Really. All right, guys, 63 people watching right now, the live stream. Thank you so much. It would really mean the world to me if you could give this stream a thumbs up. Okay, if you're learning something, if you like it, if you don't like it, you can give it a thumbs down. That's also fine. So yeah, what can you trade after such a price action? After the market did this, honestly, like what can you trade? Maybe a pullback. Alex, did you say that we should not look for the big reversal? Well, we're not looking for the big reversal. We're looking for a pullback. Okay, so JJ, it's so tears with your coffee, and then all you can do is soak in your tears. This is what you're saying in the chat. I know maybe you're joking, but maybe you're not. Okay, so I really want to talk about this a little bit, about this feeling of regret that we have when we see that we could have made so much money, but for some reason we did not take the trade. And this feeling of regret is not the regret of not having made that money. It's the regret of not having trusted your strategy. It's the regret of not having respected your trading plan. It's the regret of not following a discipline in regards to trading, whether that is, trade us at a specific hour, trade a specific model, whatever. I want you to be honest with yourselves and ask yourselves if, based on your set of rules, based on your only one strategy that you're using, if this move, this drop in here developed in a way in which your strategy told you take the trade, but you did not take the trade. Because if the answer to this is yes, my only strategy that I know, that I use, that I backtested enough in order to convince myself that it is profitable and I'm actually making an income off of this strategy told me that I should take this short trade, and for whatever reason I did not. If this is the case, then yes, you need to feel sorry for not having taken this trade. You need to feel the regret. You need to feel this pain of not having taken this setup, which according to your proven strategy, you should have taken. If you feel that pain and that regret right now, you deserve to feel that pain and that regret right now. Soak in it, acknowledge it, and write somewhere in your journal or on your screen or wherever you want. Write somewhere so that you know not to repeat this kind of crap again, not to distrust your strategy when it tells you to take a short or a buy. All right? But if you don't have a set of rules, if you don't follow a specific strategy, if you are not sure whether your set of rules were met, your entry criteria was met on this trade, on this setup, on this drop, for you to take this drop, you have no reason to regret. You're like, what are you regretting? What? The fact that you stayed out of the trade, out of the market because you didn't know what to do? Guys, seriously, you should congratulate yourself for not getting in a trade just because you did not know how to get in the trade. You need to congratulate yourself. I don't know if you guys realize, but being okay with missing a trade opportunity when that trade opportunity is not confirmed based on your set of rules, that's actually a very big proof of discipline. Okay? Really. Like really. So if you don't have a set of rules that you follow, okay? If you don't know exactly why you would have taken this trade, if you would have gone in, like if you sold and then you make 200 pips on this trade, or I don't know, whatever the drop was, okay? You make $1,000 on this. If this happens and then you have no idea why you entered, and not only that you don't have any idea why you entered the trade, but you don't know how to replicate the same thing in the future. You don't know exactly what to look for. Well, if it does this, then I'll wait for it to do that, and then I'll execute on the trade, and I'll have my stop loss here, and then I'll target this drawn liquidity. If you do not have answers for these things, but you did take a sell and you did profit based on that, please, please, please be aware of the fact that long term, this is not something that you want to do. Okay, I understand. Maybe you made profit. Kudos. But if you don't know exactly how you could replicate this in the future, based on what entry criteria you could enter in the future again so that you can have similar results, don't be happy for the profit that you made today. Rather, ask yourself, how can I do so that in the future, this kind of win will not feel like just a lucky guess? All right? This is what you have to do. This would make sense for you to do. You guys, seriously. You see what it says here? It says that you should follow the plan. Okay? But if you don't have a plan, there is nothing that you can follow. And if you don't have a trading plan that you follow, but still you do take trades, you have to understand that if you're winning by taking trades without an actual trading plan, those wins are just luck. And if you're losing because you're taking trades without actually having a plan, I'm sorry to say this, but you kind of like deserve it. And if you have a plan, but you don't follow it and you lose, again, you deserve it. And if you have a plan and you follow it and you lose, it's just part of the game. Okay? Because at the end of the week, at the end of the month, at the end of the year, when you're going to draw a line, you're going to see that sticking to the same trading plan long term is going to bring you a lot more wins than it will bring you losses. But you just have to have a plan. That's the key. A trading plan, not a plan of, I plan that by the end of 2025, I'm going to make $5 million. Not that kind of plan, but an actual trading plan, actionable steps. What exactly am I looking for to happen in the market? What kind of candles do I want to see printing? When will I enter the trade? When will I exit? Where will I have my stop loss? How much money am I going to risk per trade? How many trades do I intend to take per day? What hour of the day do I plan to be in front of my charts looking for a setup? What pair am I going to trade? Okay? You really need to have all of this set in here. You really have to. And like I said, if right now you feel sorry for not having taken this short, but I'm going to ask you, okay, and now looking back, did this meet your trading plan? And you're going to say, well, I don't know what my trading plan is. Well, then guess what? It's very good that you did not take a trade. Okay? All we can do right now is just wait. There's nothing else that we can do. Okay? That's it. And there's a very, 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 very big possibility that we're just going to keep waiting and nothing's going to happen till the end of the session. And that's fine. We have to be okay with that as well. This major flip zone over here, it's the previous all-time high that I was talking about. Before I started the live stream, I was talking to my boyfriend and he was saying that it's likely for price to want to reach out for equilibrium right now because London Open was just, not London Open, sorry, this week's Open was just like left behind like crazy. And that was March 17, I think. And here it is. Let's just put a line right there at this week's Open. So March 17th, 12 midnight here, Monday Open. Because this was really left behind, like really left behind. And that's like 150 pips away from where price is right now. Yeah, still a lot. So in total right now, this entire drop was like how much? Wow, 3,200 points. Jesus. That's crazy. And you see, this push happened in 2 hours. Like, no, not 2 hours. I think it was actually less. And 1 hour and 20 minutes. See, 1 hour, 1.5 hours to drop like more than 3,000 points. All right, more than 300 pips. And in here, we had like 7 hours to go up. How much? 160. Yeah, we can definitely see that it's just aiming to go lower. See, that's why I'm saying it's a run on liquidity, because just look at like, and you see silver has been starting to do these like heavy drops since Tuesday, I think. Yeah, Tuesday here. at market open at 9 a.m. See that push? What did gold do there? It only had this minor push to the downside, see, like a tiny little one. And then we had this drop. And what did gold do? It made this one. But then with every pullback, gold was going higher, silver was not going higher. So it was definitely accumulating here. Now, I would dare to say that we're likely in a market maker sell model. And that we're targeting this area. And then we're gonna have a pullback. And then price will continue for the next weeks to probably head lower. Of course, it also depends on economic data, like not economic data, but more like wars, Trump, whatever, crazy stuff like that. But yeah. So, don't be sad if you didn't take any trade. Don't get cocky if you did, if you made profit. Because there's going to be plenty of opportunities for us the next days, the next weeks. Let's see what you guys are saying in the chat. Which UTC time zone do you have for your trading view chart? I have UTC -4, which is New York time. I would like to discuss marking the SMT to see whether it's the right style of marking it. And you would like to discuss that? How? So he says, if I mark my SMT buy side 240 to 405, so 240 to 405, let's see. 240. Oh, 240 to 405. Well, let's see. So you say 240 this one to 405 this one. And then here on silver, we had this one and this one. Yeah, that's correct. Exactly. But in this case, so you're with this strategy, you're looking to trade gold. Okay, this is how I use it. So I would only trade gold in here. So the way I would trade gold in here would be to, if gold is the one that's creating a higher high, all right, then I will consider that it might be a sweep of liquidity, and that would be confirmed to me. The fact that gold making a higher high was just a sweep of liquidity, that would be confirmed to me if I would see gold creating a bearish fair value gap after taking the higher high, after creating the higher high, which happened, all right? So gold did create this bearish fair value gap over here. Now, having the SMT and the fair value gap is not enough, okay? Is not enough in order for me to consider that I have a trade, okay? Because for now, I only have a setup, but I don't have an entry trigger, right? So the entry trigger next is to wait for price of gold to top the fair value gap and then create a 5-minute bearish candle. All right? We can see that in this case, gold came up into the fair value gap, but it did not create a bearish candle. It actually just went higher and closed above the fair value gap. Okay? In doing this, you basically start to question the validity of the SMT plus the fair value gap. Because if this was just a buy-side liquidity sweep, and right now smart money intend to go lower because they created the bearish fair value gap, the bearish fair value gap should act as a resistance. It should not allow price to close higher than that fair value gap. All right? So now you start to ask yourself, okay, is there anything on the chart that I'm actually not aware of right now, and that might actually be an indication that it would not be smart of me to take a short right now? Why? Because the area that I was looking to act as a resistance, which is this bearish fair value gap, was actually not respected. All right? So then the easiest way to see whether there are different things forming on the chart that might not necessarily be an indication of price wanting to go down, but actually it would be better for you to stay away from a short trade, is to look for opposing SMTs. So if this is a bearish SMT because it happened at the highs, so it's indicating a possible short coming in, you want to look for SMTs that would occur at the lows, which would indicate price may be looking to go higher. All right. So once price closed above the fair value gap here, okay, it created this low there, which that low coincides to this low here on silver. All right. Now I know that this low, okay, 140 and 425, they look as being higher lows on both pairs, and that's true. But on silver, you would more consider it like equal lows, okay? And there is a type of SMT where your traded pair makes a higher low, okay? And your indicator pair, which in this case is silver, creates equal lows. In this case, basically you are being told that there is strength in the market of your traded asset, which is gold. Why? Because it's unable to create a lower low, right? So it creates a higher low, okay? Whereas the indicator, which in our case is silver, is creating a support, okay? So strength being signaled on gold plus support being created on silver tells you that maybe it's not that indicated for you to look for a bearish trade, especially since price closed above that bearish fair value gap, which you were expecting to act as a resistance. Okay? So yes, you did mark this SMT correctly. I was also watching it during the London session, but then seeing that price is not reacting from there, I just said, you know what? That's fine. Just let it be. Okay? I hope it clarifies. Someone asking, do you apply this strategy on 1 minute? You can, yeah. I don't do it that often on the 1 minute, but you can definitely do it. The reason why I don't do it that often on the 1 minute is because it's gonna happen quite often, and it's not that reliable on the 1 minute, I would say. But you can have like quick scalps on the 1 minute with it, like, I don't know, just target like 10-15 pips, and that's it, you know. Captain Singh is asking if you don't mind to tell us how long it takes to be consistently profitable. I mean, approximately, I'm still learning since last 2 years, 24 months. I have reached to break even as of now. Well, congratulations, my friend. Reaching break even after 2 years, that's an achievement. I would call it an achievement. So it's good. Okay. I was talking the other days in one of the live streams about the fact that when you are a losing trader, so you usually just keep on losing, you should not consider looking for, your target should not be to make profits. Okay. When you lose, your target should be to be a break-even trader. Okay. And then after you become a break-even trader and you stay, like, you don't have to stay at break-even for too much time. But if it so happens that you're not making money, but you're not losing money either, you're just continuing to be a break-even trader for, 1 month, 2 months, 3 months. Okay. Now it's time to level up. So you've reached your goal of stopping the losing streaks. And now you're at break even. And you were able to not lose consistently. You shouldn't think about the fact that, it's a downside because I'm just at the same level, I'm just at the same level for the past 2-3 months because I'm just a break-even trader. That's not bad. Being a break-even trader means not being a losing trader. It's positive. Okay? You could have been in a much worse situation. So after you get to break even and you acknowledge the fact that you're actually a break-even trader, and when you soak in that thought that, well, you know what? I kept on losing for like the past 2 years, and since 3 months ago, my losses have stopped. So at least I managed to solve a problem that I had, which was I was leaking money and now I'm not anymore. Okay? So now you have to go back, look at what you were doing prior to becoming a break-even trader and what did you change in your trading approach. Can be related to the strategy. It could be related to trading just one pair. It could be related to trading a specific session. It could be related to having like a more strict risk management and trade management. You clearly made a change that made you level up from being loser to being break-even. Okay? Not loser, but losing trader, sorry. To being break-even trader, right? So now you have to go back, really be present about what you changed. And now you have to look for ways in which to improve what it is that you're doing right now, just the same way in which you improved what you were doing wrong when you were a losing trader, and then you've actually leveled up to not losing anymore, but being break-even. Okay? And then your goal, after you hit break-even and you acknowledge the fact that you're break-even, your next step is to start winning. Okay? Little wins, but consistent wins. Or rather, small but consistent. That's going to add up faster than you think, you guys. Seriously, faster than you think. Okay? Now, just to answer your question, because your actual question was, how long does it take to be consistently profitable? It really depends on every person. Okay? It took you 2 years to be break-even. There are traders who have been in this industry for like more than 10 years and they're still losing. Okay? There is not a bucket in which we can fit all traders and, you actually will become profitable after 3 years. And that happens with everyone. No, because if that would be the case, we wouldn't have traders that are veterans in the industry and they're still losing. They still cannot say that this is their full-time job and that they have a monthly income that is consistent and that they're sure of, and which is made only from trading. Okay? So it really depends on every time looking at what you're doing wrong and finding ways to stop doing that or doing less of that. And at the same time, find ways to become more skilled. And the best way to become more skilled is just through backtesting. Yeah, that's just reality. Backtesting. And if you backtest without knowing exactly what you backtest, just think about it like this. Many, like 90% of you guys, when you start backtesting, you say, I'm going to backtest gold. I'm going to backtest price action of this year. I'm going to backtest the whole price action of the last year. You don't backtest price action. You don't backtest the trading, the pair. You don't, some say, I'm going to backtest the London session. You don't backtest the session. You backtest a strategy. Okay? When you open your chart, your backtesting software, whatever it is that you open, with the intention to backtest, you need to know what you will backtest, what strategy you're going to backtest. All right? Because if you don't have a trading plan that you're going to test, then you're just going to click next candle, next candle, next candle, next candle, and you're going to hit buy and sell randomly and nothing's going to happen. You will not become more skilled. On the contrary, what will happen is that you will become even more frustrated day after day, because you will feel more and more that you're wasting time. You will feel more and more that so many others are doing it, are making it at life, are winning at life with trading, whatever, and that you are being left behind. But you're not being left behind. No one's leaving you behind. You're the only person who leaves yourself behind by not realizing the fact that you need to have a clear, structured trading strategy, set of rules, trading plan, whatever you want to call it. And without this, you will not be able to improve your skills because you will not know what to backtest. You will think that, well, I will open gold's chart and I'm just going to click on next candle, replay market, and I'm going to open buy and sell, and I'll know if I'm can actually be profitable. And then when you go live with live funds or with a prop firm, boom, you blow it. Why? Because you actually did not backtest anything. You thought you were doing that, but you were just kidding yourself. Okay? Boom. Let's take a quick break. I'll be right back in about 2, maybe 3 minutes. Okay? Be right back. I'll go refill my glass of water and feed my cats. All right, back at it. I refilled my glass of water. Someone asking, is the market changing due to savings time? No, it's not. Would it be better identifying the SMTs on the 5 minutes or 15 minutes time frame and drop to the 1 minute for a confirmation, like a break of structure, when the market retraces to the fair value gap it created on the 5 or 15 minute after the SMT? That is also a good approach. Afahene. I don't know if I'm pronouncing your name correctly. Apologies if I'm butchering it. What made you want to trade gold over Forex pairs? Just curious. I was afraid to trade gold because I thought it was so volatile, but I was already consistently profitable with Euro USD, with Euro AUD, with the GBP USD. Actually, I was trading all the pairs. And I was consistently profitable for some time. And I was very afraid to trade gold because I thought that it's so volatile and it moves so fast and that I could risk a lot. But then there comes a time when you have to level up, step up to your fears, and that's exactly what I did. I said, well, if I am a good trader, I should be able to trade every Forex pair, including the more volatile ones. So yeah. Or, well, gold is a commodity, but still, it's a CFD, so. Thanks for answering. In my case, after taking trade, I kept myself away from micromanagement. I wait for target or stop loss. It's working. Perfect. Perfect. So this is what the guy who said that he started trading 2 years ago, and then he is right now, he's not profitable, but at least he started being like break even. So he is not losing anymore. So he said that what made him stop losing is the fact that he stopped micromanaging the trade. So in other words, when the price starts to go in your favor, many of you tend to take profit because you're afraid to take profit early, okay? Because you're afraid that price will take even the small profit that it just gave you. And you're thinking, well, I better take this $80 of profit rather than losing $200 if it goes the opposite way and it stops me out. And you're not thinking that if you do this 1 time, 2 times, 3 times, then there's going to come a time when you're going to have like 3-4 days, let's say, when you're going to make profit like this, but minor profit. And then there's going to come one day when the price will not go into slight profit so that it gives you the chance to take some profit, but it would actually just go directly to your stop loss. And that's the moment when you had 3-4 days of minor wins, but right now all that profit is being wiped out by one single day when you just don't do the same thing when you did with your win. So think about it like this. If you're so happy, so anxious to take small profit, why wouldn't you be so fearful of losing more? So I'm thinking, well, if you close your trade very early when it goes in profit, why wouldn't you close your trade very early when it goes to stop loss? Well, you wouldn't, right? So then you shouldn't do it when it's in profit either. If you're not willing to limit your loss, you should definitely not limit your profit. And this is exactly what you guys are doing whenever you decide to take your profit, to close the trade too early after it's gone just a little bit in profit. Okay? This is what you're doing. You're limiting the money that you can make. And if you're limiting your profit, why wouldn't you limit your stop, your loss? Okay? So yeah, so for this guide worked, that's absolutely a great change that you did right there. And I really think that if more people would stop micromanaging their trade, they would actually make so much more money. So right now, what I would suggest that you start looking into is maybe journal and see, like, for example, let's say that maybe you're trading 2 sessions. Maybe you're trading London and New York, and you could make like a, you know, like a trades journal and see whether the losses that you usually take, if most of them happen during a specific session. So I'll tell you what happened to me in my first 2 months of trading a prop firm account, and how that completely shifted my perspective on the sessions that I was trading. So when I started trading a prop firm account, I had in my dashboard this thing where you actually can see if the price, if the trades that you took, whether they're losses or wins, if they're actually taken during a specific day. So it actually made like a report where I would see, okay, so I'm losing more during London and I'm losing more when I trade during London before 2 a.m. New York. And then I said, or before, 3 a.m. New York, okay? So then I said, okay, so I should stop trading on the London session before 3 a.m. New York. And when I did that, like, I was shocked, because it seemed as if I was in a winning streak, win after win after win after win. But actually all I did was to stop trading during those days, at those hours, when the report was telling me that I usually end up losing when I take trades before 3 a.m. New York on the London session. And then I looked up another report where it said that usually on Mondays, I lose more. It was like 40% of my losses were taken on Mondays. And then the rest of 60% of my losses, my total losses during an entire month. Let's say during a month, I had like 40 setups, okay? 2 setups every day, 1 on London, 1 on New York. Out of these 40 trades during an entire month, I had, let's say, 10 losses, okay? 25% I was losing, like my win rate was 75%. So 10 losses were taken on Monday, were losses, 10 losses during a month, right? And then out of these 10 losses, 4 of them were taken on Mondays. And then 2 were on Tuesdays, 2 were on Wednesdays, another 2 on Tuesdays, and another 2 on Thursdays, and another 2 on Fridays, right? But the point is that almost half of my losses were taken on a specific day, which was Monday. So then the next month, what I did, I stopped trading Mondays. And on top of that, I was also not taking any trades on London during or before 3 a.m. New York. So I removed 2 trading windows from my trading activity. Trading windows when I was losing more. Okay, the more of the trades that I was taking during those times or days were losing trades. And so I just stopped trading during those days and those hours. And that completely shifted my results, completely. Okay, so figuring out when you lose more and just stop trading during those days or those hours, it's already a huge level up. Okay, huge level up it's gonna be. Okay, when you were trading forex pairs, were you using this strategy also? No, I was using something else. But I just looked yesterday at what I was using, like when I first started my Telegram channel, which was back in, I think, December 2019. I was using SMT divergence, but it was not with, actually I was using divergences, but it was not with another pair. It was actually with an indicator. It was called TDI, Traders Dynamic Index, and it was just a combination of Bollinger Bands and some EMAs and the Relative Strength Index. And when I had that plus like a minor breakup structure, then I would, and of course also a fair value gap, then I would wait for a tap to the fair value gap and then I would take the trade. Yeah. Yeah, so this is the pullback. I wonder, is it the pullback or is it reversal? We don't know, we'll see. What could be telling us if this is a pullback or it's actually just a reversal? Any higher time frame SMTs? Definitely we have. Just look at this, okay? Just look at this. So silver, oh, this was a flip zone actually. Not, okay, flip zone. So just look at this, okay? We have this low over here. All right, that one, which silver swept. This low is from March 13. On gold, it's right here. So silver swept this area, all right, boom. Whereas gold didn't even reach here. I'm curious to see whether at least gold came in the 50s of this range. Let's see. Almost came there, but you know what? I'm not really sure if I would put it from here, but rather from here, because this is where the two pairs got actually back in sync. Okay, so here. Wow, almost there. Nothing interesting for me so far in the chart. No reason to look for any kind of trade, any kind of setup. Well, it's Friday today. Could we say that we had the TGIF set up? Did we have the TGIF setup? For those of you who don't know what the TGIF setup is something that ICT came up with. It's thank God it's Friday. And here's what he says about that. He says that if you look at the weekly chart and it's Friday, and you see that the weekly candle didn't actually form a wick yet, and it's already Friday, and it's already like mostly like a body candle, then you should expect that during Fridays, you should see a move that's going to be opposite to the direction of the current weekly candle. So for example, we had the weekly candle being like around here, I think. And today it just dropped a lot. So I guess we could say that it was a TGIF kind of setup, where we were expecting a bearish day simply because the weekly candle was too bullish. I guess you could say that. Yeah. Question: before you look at lower time frame, do you get a bias from weekly or daily time frame first? Usually I don't. Usually from the maybe 1 hour. But to be honest, I am not such a big fan of looking at the higher time frames like daily, weekly, 4 hour, stuff like that. Not in order to make myself an idea of where the price might be. Not to make myself an idea about, well, it's going to go up or down today. Because if I would do this, I would most likely, like my brain will most likely find a way to fabricate a reason for which price might want to go bullish, for example, today. And then I'll look in the chart and then I will see a lot of bearish opportunities. And I'm just not going to take them simply because I already came biased on the lower time frames, thinking that, well, the higher time frames telling me it should be going up, but right now the lower time frame is telling me that I have a bearish setup, so might as well not take it because the higher time frame is always stronger than the smaller time frame. Actually not. And I've talked about this before. Usually when we're going to have the markets reversing or starting a pullback, that opposite movement, opposite to where it was currently going. So if it was currently going up for the past, 2-3 days, or for the past session or so, once it's going to start to move the opposite direction, the first time frame where you're going to see a confirmation is going to be starting from the smallest time frames, right? So like, for example, if you would look at the 1 second chart, you would see that you could actually get an entry confirmation on this 1 second chart, right? Of course, I'm just being, oh my God. Of course, I'm just exaggerating right now, but honestly, this is how it happens. So transitions from one direction to the opposite direction start to happen first on the lower time frames, and then as time passes and as time goes by, they will be supported by being confirmed on bigger time frames. So you're going to see a confirmation on the 1 minute, and then you're going to see after some time a confirmation of a continuation in that new direction on the 5 minutes, and then on the 15 minutes, and then so on and so forth. Okay, so I wouldn't necessarily go on the higher time frames to have an idea about, well, today's going to be a bullish day or today's going to be a bearish day, because I honestly trust more an entry confirmation, again, entry confirmation, entry setup that forms on the lower time frames, okay, rather than trusting that the lower time frames will not make any sort of pullback at least, and that it will just continue to move parabolically into the same direction where the a 1 hour or the daily or the weekly have moved for the past 10 weeks, for example, or 10 days or whatever. It just doesn't make sense. I'm a scalper, I'm an intraday trader. I'm interested to be looking at the lower time frames, 5 minutes, 15 minutes, because those are the time frames where I look for setups to form, intraday zones to be reached, setups to form, and then entry confirmation candles. Okay? So if I'm going to go to the 1 hour, or no, to the daily chart, and I'll say, well, the past 4 days have been bullish, and yesterday closed above the daily candle of 2 days ago, and today we already are moving higher, so we need to reach at yesterday's high. If I would do that, I would already come biased on the lower time frames, and I might actually ignore opportunities, entry setups that are actually forming right in front of my eyes. Why? Because I've already created an expectation for myself that today should be bullish. I hope it makes sense. Okay, guys, if there are any new people to the stream, thank you for being here, and I would really appreciate it if you would give a thumbs up to the stream. It would really help with the algorithm pushing my live streams to other people. So thank you in advance for liking this stream. Well. It's getting close to retesting this inverted fair value gap on the 4 hour, you guys see. It really doesn't mean that it's gonna go down from there, okay? I'm not the type of trader who is gonna wait for a price to reach into an area or just put a pending there and have the certainty that, well, once price tops here, it's going to reject. No, it doesn't make sense for me. To me, this could be just a potential area where I might see a setup forming. But if price reaches here, and I'm waiting for a setup to form as what? Well, maybe like a bearish fair value gap, and then a retap of that, and then continuing to go lower. At the same time, I would have a lower high, whereas silver would make a slightly higher high, and then it would reject, right? So I would have an SMT divergence into a H4 area where I'm expecting for a setup to form. Plus, I would have an entry confirmation here from a bearish fair value gap on gold, which would form on a minor time frame, 1 minute, 5 minute, whatever. Okay. So we reached in a zone, but the question is, will the price action give us a setup? And if it will not give you a setup, you should not be in a trade. It's that simple. Wow. Water is so good, you guys. I love water. Someone's asking, so in the back of your mind, you don't think about power of 3? No, I don't. Power of 3, for those who don't know, it's accumulation, manipulation, distribution. I don't, but I do, somehow. I don't, but I spot them. Like, for example, accumulation, manipulation, distribution. I see them when they happen. Many times I see them after they've happened. The 0.5 fib of the drop falls into the 4-hour inversion fair value gap as well. Do you believe in session liquidity? Absolutely. This is what we're talking about in here. Yup. This is what we're talking about in here during these live streams. Session liquidity. For example, we had free New York liquidity forming here. Look at the reaction that price had after taking out that. Then we had, I can show you a lot of examples. Really, like a lot of examples. You're gonna say that I'm cherry picking them, but I'm actually not. Here, another one. Boom, SMT buy side, okay? That's SMT buy side and that's SMT buy side as well. When gold creates lower high, you have two zones of liquidity. One is the first high of the SMT, the second is the second high of the SMT. All right, so price could reject from either of these. This time it rejected from that one. Look at this one. We had this one, right? Price sweeps it and then boom. So yeah, I do believe in session liquidity, but you just have to, you have to know how to find it. Because if you don't know how to find it, it will find you. Look at this one. This is session liquidity. Boom. See what it says here? SMT buy side. Look what it did. Boom. $15. What's the 15-minute doing? This on silver is a flip zone. Flip zone. Okay, let's see if we're gonna get any sort of confirmation on whatever might be happening here. I don't think so. I honestly don't think so, but we'll see. I don't think it's gonna do this. I don't think it's gonna make like a minor break of structure here, and I don't know. There is some minor sell side here, but I honestly think that it's just building up to go higher, not necessarily to use this as like draw liquidity or something like that. But anyway, we'll see. What else? This is the lowest here in this, yeah. Oh, look at this one. It's a lot more relevant. Yeah, definitely. Higher lows, relatively equal lows. And I think there was some sort of 5-minute FVG here, wasn't there? Yeah, just look at this. Wow. This was nice. See? Yeah, that was really good. And the entry for the 1 minute was here during or once the 1037 candle closed. See how that candle was also like bullish on silver. You see, rejecting from there, like creating support. Just like I said earlier, there's this type of SMT divergence where your traded pair is going to create a higher low and the indicator pair is going to create like a equal low, you know, like support, like that. And this is exactly what happened here. And this makes so much sense, or it made so much sense at the time, because gold also had created like this 5-minute BC and it got stuck in that. So in this case, we had the BC first, okay, in here, forming on the 1020 candle, and then with that candle, price actually rebalanced that, and then it started to reject. And like I said, the SMT a lot more visible on the 1 minute, not on the 5. So this could have been a trade like that. Now, about the stop loss placement, I would consider this candle as an order block right there. All right, so I would put the stop loss under that candle over here, like that. Would it have given us 2R? Definitely. More than 2R. And we could have targeted the 4-hour inversion. Yeah. So this was like a confirmation for whoever asked earlier if this can be applied on the 1 minute. Definitely. Yes, both pointy parts of the SMT are usable, definitely, absolutely. Like, you know, here's the logic of using both pointy parts, and what this guy is actually saying, like, when gold is doing this, okay, you have that high, and then you have this high, okay, and you have, like, the SMT is like this, okay, and then silver created a higher high, okay, so you have gold creating lower high, silver creating higher high. That's the SMT. On gold, the two pointy parts are these ones, right? The first high of the SMT and then the second high of the SMT. So you're going to have that one and that one. So these, both of them are buy-side liquidity areas. Price doesn't have to go all the way to the higher one, to the upper one. Most of the time, actually, in the case of such divergence, it is going to go to this one. And here's the catch. Remember how many times ICT many times said is taking out this intermediary low or this intermediary high. Remember? Well, yeah. And many times you're going to see that, for example, this is going to be forming like something like this, like an intermediary short-term high. And price is going to sweep it and then boom. Do you always mark only for New York? What about London and Asia? When I come to New York, I mark London and Asia. See, this was marked on Asia, right there, this area. But I usually, like, nowadays, I only trade New York. Which time frame, 5-minute or 15-minute, is better for marking SMTs? where whatever time frame you can spot the SMTs better on. That's the best time frame. Sometimes it's going to be 15 minutes, sometimes it's going to be 5 minutes. Sometimes whatever you're going to see on 15 minutes is going to coincide with the 5 minute. All right, let's see if we can get an entry confirmation. Not too bad. Okay, I'm taking this. Very small lot size. I'm going to be paying attention at this 5 minute. Let's see. So we had the 1 minute setup, okay? SMT, where gold created a higher high, bearish fair value gap, rebalance, entry confirmation candle, the 1111 candle. So let's see. I would have liked to see price just displacing under this low, like more than just what it did. Definitely more than it just did. It's not that, I don't know. Is this not going to hold? I'm going to consider, and it's probably not necessarily going to hold, but I'm going to consider closing my trade. I only took a 0.30. On a 50K challenge account. Yeah, most likely it's not going to hold price. But we'll see this order block here. Kind of like inverted this. I'm not really happy with it, but if price is going to show any signs of rejection from either here or here, I'm going to consider closing. But if it's going to smash through these, I'll be pretty confident that it might actually want to continue going lower. But we'll see, because it's still like 15 seconds till this current candle will close. It can still reject from here. So we'll see. Okay, so it's not rejecting. So far, so good. This is good. I also want to keep an eye on whatever it is that's forming on 5 minutes, 15 minutes, because many times we get clogged up in the 1 minute, and we just ignore the fact that price levels, like fair value gaps or stuff like that, from 15 minutes or from 5 minutes or whatever, might actually be touched by whatever move we see starting to happen right now on the 1 minute. And I think it's really important to be aware on the level the 1 minute is at right now, and see whether it's actually a good idea to take a trade or to stay in trade. Like right now, the way I would interpret this would be, well, if this created a slight higher high here and this created a lower high here, okay, then I'm thinking maybe gold took out buy side liquidity, minor buy side here, okay, and then it created this bearish fair value gap, all right? So it would not make sense for price to not respect this bearish fair value gap right now if this was just a liquidity sweep and right now it wants to go lower. And at the same time, if this was just a liquidity sweep and price would want to go lower, it should break this low, displace it. Okay, so break it with displacement. And at the same time, once it does that, once it breaks that low, that would be the moment where I could actually safely move my stop loss above this high, the last minor buy side sweep. Because then if price would displace under this low, okay, and then it would want to come above this high that took buy side in order to be able to displace lower, then if it goes above that high, I don't want to be in the trade. But before moving my stop above there, I need to wait for price to displace under that low. Okay? I need for price to displace under that low. And if it doesn't do that, then my stop loss will remain unchanged like that. Okay? And when I say that I wanted to displace under that low, I mean I wanted to break under that low and close under it. And displace meaning that I wanted to create bearish fair value gap, so continue to go lower. And I wouldn't necessarily want to see that it's going to start to go sideways right now. Or, you know, I wouldn't even want to see that maybe it wants to go back inside this fair value gap. Okay, I don't want to see it do that. I don't. Okay, so right now I'm just going to move. Stop loss is not going to move that much. So right now it's 30.18. So we're just going to move it like 30.17, something like this. Okay, so just 10 pips. Sort of like that. Okay, not such a big move, but you know, it can make a difference. And like I said, I'm also paying attention to this 5-minute fair value gap, see if it's gonna react in any way once it reaches there. But I think we're also in a 15-minute fair value gap, aren't we? Yeah, exactly, we are. So you see, on the 1 minute, it could seem like a displacement lower, okay? But on the 15 minutes, it, like, the view changes a bit. Okay, the view changes a bit. Why? Because we're in a 15-minute busy right now. So if the 15-minute busy would actually support price, therefore, and hence price wouldn't necessarily continue to go lower, then it means that this fair value gap will be invalidated. Okay, if price will not want to continue to go lower, and the 15-minute fair value gap, the 15-minute BC, is going to be the one supporting price and potentially sending it higher. Okay. So you see the, I would say, inability, right, to continuing to go lower, to break lower at this point is something that I want to keep an eye on. How do you filter out low probability SMT? Low probability SMT will not be confirmed by a fair value gap. Hey Laura, can you please tell me which broker in TradingView are you watching? Silver? Yeah, sure. I'm watching, I think it's Forex.com. Yeah, Forex.com. And for gold, I watch the same on Forex.com. Old MacDonald had a farm. E-I-E-I-O. So guys, just to explain again, if you're going to have the type of SMT where gold will create a higher high and silver will create a lower high, okay, you want the fair value gap to form after gold creates a higher high, okay? That's how the SMT is confirmed by the fair value gap, all right? And then you wait for price to tap the fair value gap and give you one bearish candle, preferably 5 minutes. The other type of SMT where we have gold creating a lower high and silver creating a higher high, in here you already have the fair value gap, okay? It's on this move to the downside on the first leg of the SMT. And gold goes up, rebalances it, and thus creates the lower high. As gold goes up and gets stuck into the fair value gap, silver creates a higher high, all right? So the indicator is overbought, whereas gold only goes up to rebalance the fair value gap and then it's going to reject. This is how you filter out low probability SMTs, okay? It's literally the most simple explanation that I have, and at the same time, the most complete explanation that I have for anyone looking to really understand and grasp the idea of SMT and how to use it and what's the meaning of it. Ooh, ooh, ooh. Yeah, you see, it's just struggling, meandering around. Just do this, boom. Oh my God, coffee is over. I don't like when that happens. So, what's the 5 minute doing? 5 minute. If it's gonna keep displacing lower, continuing to create like lower lows and so on, it's gonna be good. And like, not just continuing to create lower lows, but also create bearish fair value gaps. Okay, it's important that that keeps on happening. Okay, so 1.5 R so far, 1.6, because I've just reduced the stop loss size. I'm just gonna get ready to take some profit off. Very minor lot on this trade. However, this is a fun trade. The just for fun type of trades are not necessarily taken to make a lot of profit, even though that's totally achievable. But they're usually to, or at least for me, they're usually to, you know, show consistency in using the strategy and show trust in using the strategy and confidence, you know. All right. Nice. Okay. 2 hours is going to be around here or something like that. Maybe shouldn't necessarily wait for 2 hours. I don't know. Who knows? We'll see. I'm just going to be looking at whatever it's going to do when it hits the consequent encroachment of this candle, because it sort of like looks like an order block. I'm not really sure. But that's also where, like, oh, nice. So far, 2 R. All right, that's great. 2 R for now. That's great. And look how it touched the consequent encroachment of that candle, see? Now, question is it going to keep on rejecting from here or not? I would say that I like the way it formed this CIBI here on the 1133 candle, because it could potentially confirm that the 5 minute BC is right now being turned into an inversion fair value gap, but we will see. So I took profit, okay, and my stop loss is break even right now, so for my runner, so yeah. Just gonna put it like that. Yeah, just look at it. Wow. Insane. Could be testing this very short block on the 5-minute, but the momentum on the 1 minute, it's quite big. The bullish momentum. And I don't like how it didn't respect this thing here. At this point, I would incline to say, because someone asked about power of 3, accumulation, manipulation, and now it might start to distribute. But honestly, I wouldn't necessarily get in any other trade. Oh, we're gonna put it like this. But just so you know, this is already locked at break even. Minor runner here. Alright guys, if there's anyone new in here in the live stream, thank you for being here. You guys make sure to like the stream so that you can actually help my content reach other traders who might actually find my content inspiring or helpful or whatever. First time in this stream, just wondering, do you use weekly and how do you find bias? I don't use weekly. I do not use weekly. And how do I find bias? SMTs plus fair value gaps. Oh look, there's a sun. The sun is setting up and oh my god, it's so sunny right now in my kitchen. So it didn't take me out. I'm still with the minor runner. What if this is gonna go lower? What if? That would be cool. Well, I ran out of water again, you guys. Running out of water again. Might actually continue to move lower. That would be pretty awesome, you know. Really awesome. We'll see. I wouldn't like it though if silver would take out this and gold wouldn't take out this. I wouldn't be like, we shouldn't see that happening, and if we should see that happening, it could be a potential sign that maybe gold doesn't necessarily want to move lower, but we'll see. Five, 15 minutes, what the 15 minutes is doing. Okay, and 5 minutes. Yeah, so 5 minutes seems to be rejecting from this bearish order block over here, you see? But like, well, it's not late, right? Still 2 minutes until the current candle will close. But it should start to get momentum like any minute now, if it ought to continue to move lower. But you know, it's also like, it's what time is it? It's like very close to lunchtime, like midday, 12 p.m. Usually not that much volume. As we get closer to 12 p.m. New York, the volume really starts to decrease. Usually, but we'll see. Okay, so we see silver taking out this minor low here. But gold, it's not. It's like it's struggling, see? The 1135 low. "15 minutes." What the 15 minutes is doing is, so a new 15-minute candle just opened, and look at the rejection that we're getting from here. You guys see from this BISI? Not really cool, not nice at all. And this candle, 1135. Yeah, it just opened here, and yeah. Reason I keep commenting is because I'm sure that some of you did not take any profit on this bearish setup, and I'm thinking that maybe it's helping you in any way, shape, or form to decide whether you are sure that you still want to be in this trade. Maybe you might reconsider that. I don't know. I'm just saying. Or at least have an idea about what to pay attention to, because it really helps to take read. And you can actually do this in the, you know, in your room or when you're at home. You can actually just tape read, because it's really gonna help you to become aware of your thought process. Just speak out loud about whatever it is that your C price doing. It's really gonna help you guys, honestly. So it's almost 6 p.m. here. Wow, 6 p.m. So this weekend, Europe will switch to daylight savings time. So we're going to switch to the summer time. And it means that those of you who have been seeing like a different hour difference, like those of you who have been a little confused these past 2 weeks about the time zone difference with New York from your broker or your location if you're not in the US. That's gonna come back to normal starting Monday. Because now the rest of the world will also go back, the rest of the world will also switch to summertime. The US did this like 2 weeks ago. They usually do it in the second week of March, whereas the rest of the world is doing it in the third or fourth week of March, something like this. Anyway, you can Google it. Every year you can Google it. When does US switch to summertime? When does the rest of the world switch to summertime? And you will just know. It's not that hard to find out. Woo, woo, woo. New to the stream, but not new to you. Been following you for quite some time now. Didn't know you also started streaming live. Thank you for being here. Thank you for following me. I really, really appreciate it. I am on TikTok, but I never post. So you can say that I'm not on TikTok. Someone asking, can you teach how liquidity works and how you market? Any video you made about liquidity? Well, this live stream, you can watch it from the beginning because this is exactly what I talked about in this live stream. So whenever you feel ready, you can actually just replay this from the beginning, and it's just going to give you access to everything that you need. Who else is happy for summer coming? Like, I'm so excited, so thrilled. I can't wait for summertime. I love summertime. I also like winter, but you know, summer has a special place. Special place. So what do you guys plan on doing this year for summer? Do you guys plan to go somewhere? Oh, look who we have here. Oh, hello. Hello, say hello to the guys. Do you guys know my cat? You don't know my cat, do you? You don't know. Hello. Come on, say hi to the guys. Say hello. See cat. Her name is Trisha. And I have another cat. And her name is Camille. I know, weird names. Oh my god, you guys, like drinking water during these live streams, I don't think it's a good idea. Honestly, I don't think drinking water during these live streams is a good idea. Whoa. So I guess I'll just have to be right back. Sorry. All right, so what happened while I was away? Nothing really, huh? Nothing really. Except for the fact that gold seems to be having a little trouble to break lower. Other than that, I'm not seeing anything. Anyone new in here, thank you for being here, and don't forget to like the stream. You guys like the stream. I got myself a protein bar because, I'm sorry you guys, but I'm a little hungry and it's already 6 p.m. and if I will not eat this right now, I'm not gonna eat for the rest of the day because it's gonna get too late. And yeah, you're gonna have to bear with me while I eat. I'm sorry if I am disrespectful. Just look at what the 5 minute is doing. It's just consolidating. And on silver, it's been consolidating for even longer. 5 minutes. Someone says in the chat the reversal is imminent. Reversal where? Up, down? What do you think? What are you saying? Rejecting, consolidating in a 5 minute BC, 10:45. 15 minute BC, 10:45. 30 minute BC, 10:30. And that's about it. Look at this guy's question. If you are profitable, so why you leave streaming? Why you live streaming? What do you mean? If your teacher knew how to read, why was he teaching you how to read? Like, do you understand the stupidity of your question? What the heck? Like what? If I'm profitable, I'm not allowed to live stream? Does that make me not be profitable? I don't know. LOL. If you think that, okay, I got out of break even. If you think that initially I took profit here, okay, at the midpoint of that 1044, which seems to be like a bullish order block. So if you think that live streaming is a sign of not being profitable, then everyone should be live streaming, because no one is actually profitable. Like, most people are not profitable, right? Like, if we were to follow your logic, who's this guy? Trading guru. Well done. Well done, buddy. You're doing well. Really well. You know, when I used to watch Raja Bank's live streams, and then I would see him and hear him get like really upset with the gulag. The gulag, that's how he called the live stream viewers. And mainly people who used to ask dumb questions. Like, man, you must be really poor if you're live streaming because you want to make money off of live streaming. You want to be paid by YouTube. Even if I want to get some extra cash from YouTube, why would that be something bad? How would that be something negative? Aren't you trading because you want to make money? So why not make money from multiple sources? You guys, no, I can't understand some people. But this guy is named Trading Guru. Yeah. And he's asking me, so if you're profitable, why are you live streaming? Okay, real question here. As you change the stop loss in accordance to order flow, do you also adjust the take profits as well, given the size was based on original stop loss, or stick to original 1 to 2R? Honestly, it really depends. Sometimes it happens, like it happened today with this 1 minute setup, that when I open the trade, I calculate the lot size based on where I would normally have the stop loss, and then I just put take profit at usually 2R. And if there's going to be any other PDA raise that will be reached after 2R, so it would be like 3R, 2.5R, whatever, then I would still take at 2R, right? But if, for example, like when I opened this trade, I did not actually pay attention nor see that this 1044 bullish order block might actually be relevant, and that I might actually want to pay attention to that. Because if I would have seen that, I probably would have opened a slighter bigger position size, because I would expect less than 1R, less than 2R, right? Because initially the stop loss was here, all right? And in order to get 2R, I would have had to go under this 5 minute BISI, this one. But seeing that this, seeing that this order block, this one, might actually be a level that I might want to pay attention to, that actually made me reconsider. So I didn't necessarily adjust the take profit or like 2R, whatever, because I adjusted the stop loss size. Okay, I actually adjusted the stop loss size, and I would have left it as it is, getting more than 2R, right? Like 3R in this case. However, I would have not taken profit at this order block because I would not have seen it. Okay, but it so happened that I did see it, and look at this. It was not just the order block, okay? It was also this. You see? Gold pushing lower, pushing lower, pushing lower, but silver being unable to do that. So it's clearly they're not synced. So when they're not synced, you're thinking synced as in synchronized. You have to think, okay, there's something fishy going on. There might be some manual intervention going on. If you're in a trade and you see an SMT that would confirm the opposite direction of what the trade you're in, you want to reconsider, right? Not reconsider as in get out of the trade, but actually just reconsider maybe your stop loss, maybe your TP, maybe getting out of the trade earlier. Why? Because if you had a bearish divergence and you took a trade and then these two pairs were synchronized in the idea that after the bearish SMT, they both started to flow downwards, that synchronization should continue to occur, okay? If it stops occurring, if they break, if they're no longer synchronized, and moreover, you start to see SMTs that could potentially indicate maybe price wanting to go higher, that's when you want to assess what are your options. Okay, I hope that answers the question. Someone's asking me if I know Tom Hugard. I heard about him, but I never watched any of his content. I don't know what he's talking about, what he speaks about. I don't know any. But I did hear that he's like a profitable, good guy, trader, whatever. Lower time frame, price action trader, great trader, hard to follow. Tom Hugard or who? If I give you 100K funded account, can you manage for me? Yes, I can, but I will not. Oh my God, you guys, you have to develop skills for yourself. Okay? You have to develop this mindset where you should be eagerly waiting for some time off so that you can actually focus on building your own skill set in whatever it is that you want to make money from. Okay? Giving someone a funded 100K account to make money for you, like, okay, if that person doesn't want to make money for you anymore, what are you gonna do next? You understand? You have to get out of that type of mindset. Oh, other people can do it for me. Yeah, you can have that mindset if you're the CEO of a company. You should have that mindset if you're the CEO of a company, but you're not. So when I have losing streak, I exhaust and lose my emotion. I understand you. I feel you, buddy, really. But then, you know, you're the only person who can control your own emotions. And actually, your own emotions and your own actions are the only things that you can actually control. You cannot control where the market's going to go. You can only control your reaction to whatever the market is doing. And you just have to build a set of rules for yourself that it's just going to work for you. You have to do that. We've all been there, okay? We've all been through hardships and we've all had losing streaks and stuff like that, and we've all lost money, but somehow you have to realize that if you don't get yourself out of the slump that you are in, no one is going to do it for you. Literally no one's going to do it for you, you guys. So Tom Hugard is millionaire trader. His trading is quite different, and he is, in my opinion, an initiative trader. I don't know what that means. We in 1 hour fair value gap, so I'm looking for 5-minute or 15-minute inversion fair value gap to short. Might be an afternoon session trade. Yeah, we'll see. What I don't really like at this point, like it's some things that I'm not really happy with at the current moment when it comes to looking for short setups. And that would be, first we have silver. It created this minor SMT here, and it seems to be a run on liquidity. In other words, buy side being used to go higher. Second thing that I don't like, and if silver is doing that, gold might also be looking to do that. Another thing that I don't like is the fact that in breaking above this minor SMT buy side here, silver created a fair value gap, came down, slightly rebalanced it, and then it shoot higher. Another thing that I don't like is that silver, it's closing back above the flip zone of London low. See, it broke under it like really powerfully, and right now it's going back above it. Okay, so we need to consider maybe it wants to go higher, maybe rebalance something around here, or maybe even grab the buy side above these two relatively equal highs on New York session. Another thing that I don't like is the fact that I'll just make these, like, I'm just going to remove these trades from here so we can see better. Another thing that I don't like right now for gold is that we took that, you know, flip zone, we took like multiple SMT areas, and then it inversed this CB, okay, and created this BC, rebalanced, went higher, right? Then rebalancing this CB, this area here that is marked by these two blue horizontal lines, around that area we have 5-minute BC, 15-minute BC, 30-minute BC, and on all these time frames price seems to be rejecting. See? Another thing that I don't like is that after, you know, accumulating inside this BC, as in here, right? Now it starts to break out of that accumulation by creating a bullish fair value gap, and it just tapped it, and it could go here to 3018, and it could actually maybe continue to go higher. Those are some of the things that I would not really be happy about when looking to take any short setups. Another thing, I wanted to take a look at this move to the upside and then take a look at this move to the downside, okay, for gold. So it took gold 1 hour to go up 170 pips, and then it took gold, sorry, oh my god, come on, Jesus, what's going on? And then it took gold like if we include the whole consolidation, an hour plus to go down only 80 pips. So this move to the downside doesn't necessarily look like a continuation of the existing move of the previous move that we've seen on New York. So far, it doesn't look like that. It looks more like a pullback. I don't know. But anyway, we'll see. Thing is that it's already getting kind of late, and I already have like 3 hours in the live stream, or how much? Wow, 3 hours. Okay, 3 hours already. So I'm just considering, because it's Friday, the price already moved, like it already moved, right? We can definitely see that. And being Friday this late, I honestly don't think that it makes any sense for me to keep staying in the live stream. So I'll probably just wait for, I don't know what I'll wait for, but the thing is that I'm considering just ending the stream any minute now. Oh my god, am I catching like a cold or what? Because all of a sudden my nose is watery and my eyes are really dry. You earn from broker and courses earning, you don't earn from trading skill. What is wrong with having multiple streams of income? Oh my god! Somebody shoot me! You know, dear trading guru, first of all, if you're not a trading guru, you should stop calling yourself a trading guru. Second, guys, this is something that I'm going to say to the other people in this live stream, not to trading guru, okay? You will never receive you will never be bad-mouthed by people who are successful. People who are successful are not wasting their time on talking shit about other people who are grinding, okay? So we have this guy, trading guru, who most likely is not a trading guru, whatever trading guru means, but whatever. Let's just say it means a person who earns their living out of trading, and then, or out of teaching how to trade. But then again, if you teach someone how to trade, you should also know how to trade yourself, because then how can you teach someone something you don't know how to do, right? But anyway, so people who are usually successful are not going to be the ones who will judge you, who will badmouth you. It's usually going to be people who are unhappy. Yeah, it's usually people who are unhappy. So dear trading guru, I'm sorry you are unhappy. I'm sorry if you envy the fact that I make money from trading, I make money from courses, from teaching people, I make money from broker commissions. I make money from affiliate marketing from one of the greatest prop firms out there, which is FundedNext. And by the way, dear trading guru, if you want to try out like a really good prop firm, you can find an affiliate marketing link in the description of my live stream, and you can contribute to me making even more money. Why not? You guys, like, seriously. Well, you know, I don't feel like offended or something like that. I will always say yes to making money any way you can, as long as it's honorable, helping others, like really helping them, and, you know, staying moral, okay? Not doing immoral stuff, whatever that means for you. So as long as you're doing this, you know, making money from brand deals, affiliate marketing, broker commissions, as long as you're not promoting, for example, the services of a broker that you know is a bad broker, or as long as you're not promoting, for example, through affiliate marketing, let's say a prop firm that you know is a bad prop firm because they usually deny payouts or stuff like that they're scammy. I don't see any reason why this would be something to be ashamed of. Okay, I honestly don't see why I would be ashamed of referring people to a company that offers good services to those people that I'm referring the company to, and at the same time, the person I referred gets a discount, the company gets a new client, and I get a commission. So it's a win-win situation on all sides involved. Okay? I don't see why I would have to be ashamed of having a trading course where I teach people my strategy in depth. Because if someone is willing to pay someone else to learn about a skill, it means that they really want to learn. And if I have that skill and that knowledge, why wouldn't I pass it over to someone else? And why would I not charge money for my time, for my dedication, for my involvement? I'm selling my time in this case for money, just like any other job. Okay? So yeah, dear trading guru, no, you have to come up with more. You just have to come up with more. I don't know, to make me feel bad or to badmouth me like in a really meaningful way. I don't think you can actually do that, but whatever. Maybe you can. And maybe you will. Who knows? We're gonna see. Wow, it's getting really late here, you guys, and dark. Kind of dark. $15 minutes. 15 minutes. 30 minutes. I think if the current 30-minute candle is going to break the high of the previous 30-minute candle, it could actually have the potential to continue to go higher. This is something I've learned from watching Raja Bank's live streaming. And by the way, if you're looking for really good insights on trading, not non-ICT concepts, I think Raja Banks is one of the best streamers that are not streaming like ICT content, in my opinion. One of the best, if not the best. And you can learn a lot of psychology tricks from him, not just how to trade, but also like a lot of useful psychology tricks. So that adds up to the value that he's sharing. 40 people watching. So there's 40 people who kept on staying in the live stream with me for the past 3 hours. Oh my God, you guys, thank you. Thank you. I really, really, really appreciate it. I guess this wraps up this week. If you guys have any questions that you want me to answer, of course, preferably related to trading, I don't know, tips and tricks, whatever, and you asked the question in the chat and I did not answer, you can go ahead and pop the question as a comment to the video, to this live stream, which will remain on my YouTube channel as a video. You guys can rewatch it. Any live stream that I'm doing will remain on the YouTube channel as a video, and you guys can watch them anytime. I can assure you that you will find out something helpful. Not new, because I'm not really an advocate of learning new stuff every day. I'm more like an advocate of finding something that you like and then spending some time perfecting that thing and turn it into a skill. So I'm sure that you're going to find very insightful information and ways to look at ICT concepts if you're going to watch any of the past live streams. If also you're curious on how I identify intraday liquidity zones, how I use SMT, how I use fair value gaps, that's always the main subject of these live streams. So by all means, you can go ahead and rewatch some of the past live streams, if not all. All right, guys. So as usual, thank you so much for being here. And I guess I'll talk to you Monday. Bye.